Hey, welcome to the Mortgage Minute for Friday, September 30th. And you know what that means? It's the end of the month. Can't believe it, but we're going to draw to see who will be the winner of the Canadian Real Estate Action Plan Home Study Course. As you recall, we asked you to send in your questions, and we'll see whoever sent in the questions. We're going to draw your name out of a hat to find out who the winner is this month. But first, let's talk about what the news in the week was. Here's a headline from last Friday. European woes rock the markets. And again, we saw more of the ups and downs, the roller coaster of the markets. Why? Because, of course, Europe is just not creating a solution. In fact, here it says Europe inches towards a rescue plan, but doubts surface. Well, no kidding. Doubts surface. Like, it's not a surprise. It's not a shock that we're seeing doubts rise around the solution that they're having with Greece and the bailout and all that stuff. Look for that to be an ongoing soap opera for the next few months until finally reasonability will eventually come through. And what I think is going to happen is people are going to say, look, enough's enough. This is a house of cards. It's Band-Aid solutions. Let Greece fail. Let's just get on with it. And it's nothing against Greece. It's just the way it is. Okay, here's an article off the web here. Is Bank of Canada too fixated on core inflation? I want you to listen to the verbiage here. It's quite amazing. It says, when policymakers around the world were scrambling to prevent with policymakers around the world scrambling to prevent another global recession, should banks be worrying about inflation? Many top central banks, particularly U.S. and England, are putting inflation-fighting efforts on hold as they struggle to keep the fragile recoveries alive. And another point here was that the Bank of Canada is basically saying, Mark Carney saying, that last week he indicated he'll ignore hotter than expected price gains for the foreseeable future because he has bigger fish to fry, such as keeping the economy as insulated as humanly possible from a frightening range of external threats. In other words, what we're seeing is that the Bank of Canada is typically, as soon as inflation goes above 2%, they would start to raise rates. Not necessarily so. In fact, we may even see a softening where they have created enough buffer room. If they feel the need to stimulate the economy, they will even lower rates. In the meantime, OFSI, which is OFSI, which is the regulator for the banking industry in Canada, came out and said it had a warning about banks' lending practices in this marketplace. They're worried about what's happening in Europe and another global credit crunch, and they saw what happened in 2008. So they've said that there's currently an incentive for borrowers to borrow too much with these low rates, and an incentive really for banks to be over-aggressive in their lending. And they're warning banks against going back to the pre-2008 lending practices, which saw a loosening of the lending guidelines. In fact, the message from OFSI to financial institutions is that the institutions should guard against loosening historical underwriting standards, for example, by moving to higher loan-to-value ratios or waiving any due diligence requirements. Financial institutions must protect against imprudent lending more so than they have historically. What's the message there? They're saying that the Canadian banking regulatory body is saying to the banks that we do not want you to relax the loan-to-value requirements, relax the self-employed guidelines, relax the guidelines for rental properties. If you're a real estate investor and you're thinking, gee, since 2008 it's really been tougher to get mortgages, well, according to this, it's not going to get easier anytime soon. So, those are the headlines for this week. Now, let's get on to see who is the winner of our draw for the Canadian Real Estate Action Plan Home Study Course with 5 CDs. And this is a home study program that you can listen to the CDs, do all the worksheets, everything in here. The idea is that you walk away at the end of the day with a business plan. So, everybody who sent us a question, some of you sent in 2 or 3, you got 2 or 3 ballots in the box. Put all the names in the box here, and Jenna's going to draw out to see who is the winner. There we go. Let's see. Let's see if I can pronounce this right. Jocelyn Hameline. Hope I didn't get your name wrong there. But Jocelyn, you're the winner. So I'll send you an email. We'll get your details of where we can ship this to. And you're the winner of the Canadian Real Estate Action Plan for this week. guys, keep sending your questions in. This week I did see one from Gavin Lowe, wondering what the major difference is between going with a bank who specializes in mortgages for investors as opposed to just walking down to your lender. There's a big difference. I just wrote an article on that, Gavin, so I'm going to send that out to you, and the next time we do a mortgage minute, I'm going to send that article out to everybody. But there is a big difference between which lender you choose and even the order in which you choose them. We'll cover that in a future mortgage minute. That's all. Have a great weekend, folks, and we'll catch you next week.